Hey traders, welcome to Charts and Coffee. Happy Friday. Hope everyone's doing well. Good to see you all. All right, so what an interesting week. We have the aftermath of, well, let's take a look. I was looking at the intraday time frame. Well, why? Let's go take a look. Here is the S&P, and we see some wild action this morning. And most of you who would have joined us for the Sunday Notes live session know that today is non-farm payroll. So it wasn't enough that we had Powell on Wednesday. That wasn't enough. That wasn't enough volatility for us. Now we've got the jobs number, and remembering that when we have any jolts, initial claims, non-farm payroll, anything that maps to employment, because the Federal Reserve has a dual mandate, both inflation and jobs, this is going to be a market mover. It's going to be a volatile one. And it was anyways. We have FOMC member Williams speaking in about 14 minutes later on today, this evening, which is going to set the scene for Sunday's open. We have Bullard and Waller. So keep an eye on that FOMC speak. But back on over to the price action we're seeing here. Notice that I'm not really talking about what the number for jobs were. It's really relatively uninteresting compared to what it is the market did. Interestingly enough, and let me, I think most of you that have been following the show know how this works. We've kind of, as I like to say, gone down the rabbit hole in terms of data, where good data, quote unquote good, positive data is perceived bearishly, right? And disappointing miss data is bullish. Why is that? Well, if we have a dual mandate, so let's put some of these pieces together. If we have a dual mandate from the Federal Reserve where they want to keep inflation at around 2%, obviously that's history. We've overshot that. And they want to keep the employment picture looking well as seeing average hourly earnings increase, right? That is actually pretty negative. See the average hour, that's not good. However, that's a big number, 428 compared to what was expected and the previous. That's really weird. The previous was the exact same number. Anyway, this is a quote unquote beat. We factored in 390. We, as a community of investors and traders, we got 428. That is quote unquote better than expected. So what we discounted was less than what we got. Well, here's your 8. I'm going to put the cursor on here. Here is your 830 candle, straight up. That makes sense, right? Oh, it's a good number. But then look what's happened since. Not so good, right? Because if equities like indices, individual stocks, tech, you name it, if stonks like lower rates, there is nothing about the jobs number today that maps to any pause, really a lot of flexibility, any accommodation regarding the trajectory of rate hikes that are being discounted into the market via the Fed fund futures. That's where those percentages come from. When you hear people talk about, well, there's this percent likelihood for a half point hike, there's this percent likelihood for a 3/4 point hike, forget quarter point hikes, gang, right now. This gives the Federal Reserve the green light to go. Jobs are strong. Federal Reserve rate hikes, half point, maybe even a little bit of a whisper of 3/4, even though he said that's mostly off the table. Psych, who knows? Who knows? But you can see the way it's being responded to, right? That is why. So the big question is, why would the market sell off on a good number? Because it's a good number. Hope that makes sense. I thought I'd kick our conversation off with that. But of course, gang, our show is about your questions, and they have been awesome at that. So let's jump into the Q&A. All right, kicking it off with, here we go. Hey there, Charles. Online breathing trainer timer, the book. Do I have another breath timer. Yeah, the box breathing. A lot of times I recommend, especially for day traders, to box breathe. Um, it's just a 444 count. So it's no longer there. I'll see if I can't throw it into the notes here, Charles. I don't have it handy on me, but if you Google box timer for or box breathing, it's a 4 inhale, 4 hold, 4 exhale, and the hold after exhalation is a real gem. 4 hold. And that's all that it is. So I know there's a bunch of apps. I have a bunch of breathing apps that I use on my phone. It really does help. I'll see if I can't dig that up. Second question was the day trading course on the site. I don't know that I renamed anything, but the day trading course. So two things. Every year we do an annual summer day trading course. This will be the third year in a row. And gratefully, it's always, grateful for two things. Grateful for you all, first of all, saying, yeah, Rog, we have an appetite for this. We want to learn how to do this. And every year, gratefully, Trish, who constructs my courses from my process, from my indicators, etc., we've really been able to emphasize different angles of day trading because there's different markets we're going to deal with throughout our career. We've gone from everything to the time-based patterns and chart patterns to volume to now we're going to get into time and volatility and time of day. And that's coming up in June. I think it's the middle of June that class is coming. So I don't think anything was renamed, but we have just an annual June day trade class where we're emphasizing different aspects of, well, first of all, what's working now. And second of all, how are we automating and simplifying the process? So you can check it out on the site, or if you sit tight for maybe another 2 weeks, 3 weeks, we're going to be gearing up for that next class. And right now, a lot of you may know, I created a process to create time-based, volatility-based price forecasts. They've been running on my chart for years and years, Forex, futures, equities. And the Lorna bot, huge shout out to the Lorna bot for expanding the packs, expanding what we're able to track on the chart. And Trish is telling me June 25, gang, June 25. So mark on your calendars, right? If you're waiting for that summer class coming up, June 25. And we got some brand new processes that are working right now, brand new tools. Yeah, really excited about that. All right, next up, sticking with the topic of day trading, Chris asks, watching your bonus video on day trading. So yes, for those of you who don't know what Chris is referring to, in the Sector Secrets Mastery, where I do, of course, my overnight swing trading, and we're also doing a little bit of day trading. That community actively day trades together almost every morning. And I sent out a bonus video of basically the morning session so you could see how I navigated through a day. The question is, I'm a visual learner, and that's why I keep the notes up and the charts up so you can see what I'm seeing. And then I put the prices for the entry in the notes that are sitting on the screen. So it's a nice steady visual of, okay, this is the charts and these are the price levels. Okay, so I'm a visual learner. I wondered if there was any way I can show the actual trades on the screen as you are doing them, not just discuss them. So Chris, if you look at the notes that I send out to everybody and that are visible on the screen, you'll see the precise price levels. It depends on what platform I'm using. I'd rather not just slide over and cover the charts with my putting in a limit order to buy or a limit order to sell. But if that mechanic helps, I don't mind to show that on the screen for a moment. But just so you know what that is, it's just me sliding over, typing in the same price that I put on the notes before the order went in, right? So you see the price levels, and I'm using limit orders to sell and limit orders to buy. So that's maybe the confusion point. All right, Rob, what's the mechanics? Are you getting in with a market order? Never. Are you getting in with a stop order? Usually not. Because we're exhaustive trading, we have plenty of time to go put in a conditional order. And I would say 90% of the time, probably 95, it's a limit order to buy or sell, depending upon what I've shared there in the notes. So hopefully that helps. And then if you want to, just nudge me every now and again when I'm in the room with you all. You want to see the order ticket, if you will, so you can see I'm putting in a limit order, what price, and sending it into the market. That's all that it is, but it just reflects what I've already sent you all out in the notes. So I hope that helps, Chris. All right, next up. Good morning, good morning, good morning. First time here. Hey there, Sam. Great to have you. All right, let's see. What happened yesterday? Hey there, Jan. What happened yesterday? Well, Wednesday was a big relief, sigh of relief. You know what? When we say relief rally, I actually think that's an incomplete phrase. What I like to say in the rooms is it was a sigh of relief, right? Whew. All right, we've got a break, but a break isn't a change in the psychology. It just means we got a little bit of a reprieve. That's it. What was the reprieve based on? From everything I could tell, where I look at the price action and I look at a stream of news that hits the airwaves, the relief rally came. And this is almost too galactically dumb in terms of the market response. I'm with you, Jan. What happened? What were people thinking? What synced up was when Kapow, that's what I call Jerome Powell, Kapow, said that probably, I think, that the 3/4 point hike is off the table. But half point hikes are still mostly what is baked in and discounted and expected. And oddly enough, there was a quick pickup in buys on that comment. That's what synced up from what I can tell the best. Momentum begets more momentum. So once a couple of piranhas start the feeding frenzy, it just feeds on itself. And I think that's what we saw. Momentum chasers who have been looking for a bottom probably got stung on chasing that higher. Momentum traders looking at minor lows, the very one that I shared with you all Tuesday night in the free video, check that video out. In fact, the two free videos from this week back at the Simpler Trading YouTube channel, check them out. And more importantly than that, once you watch them, leave questions that you might have, because that laid out the pattern and the probability for the week. Technically, what was setting up as we are going into this FOMC hot zone. So Thursday comes back down. Why? You know, Jan, the best way to say it is the analogy of the emperor had no clothes. Why would anybody, I was looking, now here's where I will say what I was expecting didn't happen. So let me also mention that. Normally, when we have a feeding frenzy, people come home, retail investors, traders come home and say, oh my gosh, I missed the bottom, it's in. They see the big rally, they FOMO buy. And the next session we see between 9:30 and 10 Eastern, or 9:30 and 10:30, we start to see a little bit more follow through. We did not see that. The market took a look at the heights it was at. Market participants, buyers, took a look at where they were at, got lightheaded because the air was pretty darn thin up there, and down we came because there was really no reason to say, well, why are we continuing to move higher? What I was disappointed with was that we didn't have that extra little push, little whoop. And then, right, the market, my sound effects are not great. Like usually it's a little, it's like the cartoons when the planes went do, 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 and then it runs out of gas and boop, 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 boop. That's what I was looking for, that last little push, and we didn't get it. So exactly, as if rate hikes had not been discounted, but when Powell took the 3/4 off, go figure. The markets don't have to make sense. They just do what they do, which is why we need to trade what we see and not what we think, and certainly not what we feel. All right. Thanks for the question, Jen. What are the red and green brackets above indicate? Janelle, what they indicate is a process that I created actually back in my third book, using historical volatility and time to project support and resistance. This is volatility-based support and resistance. All right, next up, Joseph asks, what is the watch list and price? Hang on here. Sorry, my caffeine clearly has not kicked in. Joseph asks, what is on my watch list and price is close to entry? Oh, what's kind of brewing? A lot was brewing on Powell, and I chose to, from a risk-oriented standpoint, pass on the potential follow-through volatility. But we have a number of names in financials, Morgan Stanley, Bank of America, Citi. We've been in the mastery keeping on Starbucks, Johnson & Johnson, AMAT, P10, Bank of America, which I mentioned already, Cisco, XLK, Micron, ITB. I mean, that's just a quick look at what we discussed on the Wednesday live trading. So let's see, I'll show you right here. I've got you can't even actually, it just looks blank on the screen, doesn't it? Yeah, I've got 2 pages of just some uh, outperformers, relative outperformers based on our multi-chart scan. And where is our multi-chart? There we go. Based on our multi-chart scan. So I've got a handful of relative outperformers that we have our eye on, and that's pretty much where my attention is. But I'll tell you what, and this is not only for you, Joseph, but this is for our mastery members who are in the Charts and Coffee show with me right now. In January, when things went a little haywire, like they are right now, I took almost 4 trading sessions to even start rebuilding the watch list, 3 or 4. And it took us almost 7 before we started putting on new trades, because we can put in trades now, or we can wait for some kind of alignment. And what I'm not seeing is the alignment. However, that gives us all time to reassess, all time to take a look at the watch list together. And the precursor to our run through Q1 and into Q2 was things going haywire, rebuilding the watch list, and then the prudence, the patience to wait for those setups to come to us. And then we got to work. When we got to work, it came on like an avalanche. It came on very quickly. Lots of setups, lots of activity. So enjoy the pause for a moment. We're going to reassess. We're going to be really cautious about it. We're going to be really careful about it. And then once everything's lined up, that's when we hit the gas pedal. That's when we get aggressive. So we're in that sort of pause phase, that assessment phase before we, dive back in, which is really exciting. Okay, next up are the classes included with the Sector Secrets membership? So the bonus video that I sent out, I send out bonus videos, and we have bonus sessions that we schedule out all the time. But any classes I do are separate from the mastery. Thanks for the question. What does the red and green indicator surrounding these are called grab candles, Janelle. These are called grab candles, and everyone can download them for free over at countdowntrader.com. And they signal support and resistance based on time and volatility. All right. I'm a new Sector Secrets member. Very cool, Brian. Welcome. Do members get my indicators as part of Sector Secrets Mastery, or do we need to buy them? So, Brian, thank you for the question. When you join Sector Secrets Mastery, one of the things that when Trish and I were putting together what this mastery would be about 2+ years ago, we said, look, on day 1, we want you to have what you need to do the trades that we do in the mastery, and which is at the heart of what our mastery is. Now, it's evolved. When we first started the mastery, it was swing trading, daily time frame, stocks, and ETFs, hence Sector Secrets. It's really become Raghee Secrets. It's really become all things Raghee because the group is active and positive. And what's great is I can keep that room open because everyone's working together so well. And these are things you only know after the fact, where I realize how grateful I am that I have a fantastic group that works together and sticks with the process that we teach. So we've just been continuing, because of the community, because of you all, we've been continuing to expand what we do. So now every quarter, we're able to do my longer term portfolio discussion. And then we're able to include a little bit of day trading, and that just continues to grow as the community is more interested and grows. So the core of what we do, the main idea of Sector Secrets is using grab candles, Darvis, propulsion, a specific stochastic that I use. You all get the JT multi, you get a number of tools for free. What you need to navigate through the core of what we do in the mastery is included in the mastery. Now, the things that we're growing into, more advanced day trading, some of those things, yes, there are some ancillary tools, but Brian, you don't need them on day 1. Heck, you don't need them on day 101. If you choose that that's something you want to continue to add to your repertoire, I've got it, but you do not need to purchase anything on day 1 or even day 101. So I hope that helps. All right. Next up, HSIC. All right. Yeah, let's take a look at some symbols here. And I appreciate the questions. Good stuff, gang. I do appreciate it. And of course, on Friday, speaking of questions, we do the AMA, Ask Me Anything session for 90 minutes, 2:30 to 4 p.m. Eastern. Whatever it is, I call it Ask Me My Favorite Color question. Whatever questions you have, whatever topics, whatever technical issues, we just do that for 90 minutes every Friday because we're winding down the week, and the questions from the week I want to make sure I address before we start the next week anew. So good structure before earnings on HSIC, had decent structure. Dustin, I actually would, when I talk about decent structure, what kind of structure? It was no longer trending, but you're right. I would agree, between the 22nd of February and the 22nd of, go figure, 22nd of April, for that 2-month period, beautiful uptrending structure. That broke by the 26th, 27th. So going into earnings, what we had was a choppy market fade off the 200. All right. So that was really not bullish structure. It was more overbought, oversold structure. And then if you use the propulsion, which is a free tool we make available at Countdown Trader, and then you take a look at the Darvis, that's a pretty nice oversold zone. And oh my gosh, yeah, Dustin, great eye, because take a look. Support, not just at the Darvis, but the 200. And look at your stochastic saying go. And that's that transition in our sector secret slow stow from green to red. That's just a crossing, gang. There's nothing fancy about that. That's the crossing of the K and D. I am insanely nearsighted. I have been since the 4th grade. So color is easier for me to see than narrow little lines, doing some sort of salsa together. I can't see that dance of lines well. So everything on my chart's color-coded, pretty prominent, pre-drawn. It's just easier for me and my nearsighted eyes to see. So that transition is the KD cross, those lines crossing. And this is a 21-3 slow stow. The sector part of it, we have some signals that help emphasize the turns and color changes, but it's a slow stochastic, 21K 3D, and that's a good eye, but it's already moved. So that was the timing, right? Darvis, propulsion, and then even a minor low. Very good eye on that one, Dustin. If you grab that one on the way up, kudos. All right, gosh, it's already 9:22. Let me grab a couple questions and then we'll wrap it up for today. Remember, on Sunday, we have our weekly show, our weekly notes live show from 6 to 6:30 p.m., where I will discuss the notes that I send out to members. So if you're a member of the Sector Secrets Mastery, Options Room, Futures Room, I send out my notes for what I'm looking at this week in the market. I send that out to you all. And then we have the show that follows that send, that alert. So I'll see you all for that. And then remember, for those of you that were asking earlier about the day trading class, June 25, it's coming up right around the corner. Check out some of the free videos that I'll be cutting and in the Simpler Trading YouTube channel, as well as over at Countdown Trader. That's going to start to prepare you for that class and give you an idea of what I'm doing now and what I'll be teaching you far more in depth in that class. All right, Megazord, I was wondering what you might recommend for trading the Dow. Sure. In small size, I like using options in SPY, QQQ. Right, DIA options are just crickets and tumbleweeds. Micro YM. Megazord, yeah, the micro YM I think would be your best shot. However, also remember, and this is very much at the heart of what we do in the mastery, if DIA is something you want to trade, take a look at some of the relative outperformers at the stock level in the DIA. Take a look at the XLF, take a look at XLK, take a look at XLV. If one of the sectors is a relative outperforming sector and is mapping to the same kind of setup you're looking in the DIA, maybe get a little bit more granular to the sector rather than trading that broader index. Go down to that next level with the sector or even the stock and see if you can't take advantage of sort of a proxy approach that I teach, where, yeah, we may not like the setup there, or for any number of reasons, we're not going to trade that particular symbol, but we can look for an alternative, a proxy to it. I hope that makes sense. All right. So that is our show for today. So thank you as always for all the questions. And I will see you all on let's see here. I think I'm caught up to Megazord. Sorry, gang. I'm taking a look at some of the other questions that came up after. Let's see. Did I say I thought and I feel? Trader Momo? Yeah, I told the members, hey, when I start saying I think and I feel, yeah, let me know. When it comes to analysis, when it comes to analysis. All right. Yeah, thank you. I appreciate that. We all hold each other accountable in the Sector Secrets room. That's one of the reasons it's such a great place. And let's see. I think I caught up on the question. So as always, gang, I will see you all on Sunday, and then we'll have our next Charts and Coffee show on Monday. All right. And again, AMA session 2:30 today. I'll see you all in the futures room and Sector Secrets Mastery Room then. Be good to each other, gang. I'll talk with you soon.